So this right here is one of my Bitcoin wallets. In my last week's video, you saw I was down about $19,000 on this exact same one. Now it's nearly 40 grand, and that's not even counting my other wallets or what's happened to my index funds this week as well. The S&P took a massive hit. That's where I'm at. And you know what I did? I bought anywhere between another 30 to 40 grand worth of Bitcoin just this week alone, while everyone else is freaking out, while my comment section is completely roasting me, and I'm honestly okay with it. I'm really hoping that this bleeding actually continues. All jokes aside, I don't think most people understand. They think that the crash has already happened or we're in the midst of it. I don't even think it started. I really, really don't. Right now, I think we're seeing something that could be a lot bigger, a lot worse than 2008. I know it sounds dramatic and a little bit doom and gloomy, but by the end of this video, I can promise you I'm going to show you why the data supports it, why most people are just genuinely going to lose, unfortunately, but more importantly, how you can actually position yourself to come out the other side very, very wealthy. This isn't just a crash. I do think this is a once-in-a-lifetime wealth transfer, where if you take it seriously enough, there's not going to be a second chance, but this one time can set you up big. And as always, the only reason I'm able to be so bullish in the first place and have enough cash flow to do this is my online service-based business, which is where most of my wealth has been built. So I've helped 10 people. It's been a record month. I've helped 10, 11 people get their first few clients so they can eventually quit their 9-to-5 and be able to invest at the levels that I do, have the freedom and et cetera, et cetera. I want to be able to help you do the exact same if you're in a similar position. It's obviously beginner friendly. I'm running an offer where if your application checks out, I'll turn our roadmap call into a mini coaching call to give you advice, see if I can help you really just get to 3 to 5 grand a month online, and we'll take it from there. So apply below if you're interested. I want to get into why this could be worse than 2008, because I know that's the hook, line, and sinker. The S&P has dropped a bit of a percent from its highs. It's not that crazy, but we've seen a lot of major sell-offs. Yesterday was insane. As I'm recording this on Friday. Thursday was insane. Market at 3 p.m., 3:30 p.m. Eastern, there was a huge dip. And every other day, it seems to be there's another red day that wipes out a ton of gains. And this might just be the beginning because, again, consumer confidence, it's tanked to levels we haven't seen since early 2020. People are scared to spend. Businesses are very scared to hire. That fear is spreading through everything, including the markets, right? Which is where a lot of people have their wealth. And layoffs are picking up across tons of industries, right? Tech companies that were untouchable a couple years ago are cutting thousands of jobs across all industries. I'm not just talking tech, but like finance, media, retail, everyone is seeing cuts. And these aren't just small startups, which is the major factor that I think is the biggest issue. Is corporations are announcing hiring freezes and reducing the headcounts. And when big companies are doing that, that just ripples down to everyone. It doesn't matter what company you work at. So again, I talked about this briefly, but the national debt is at like 30-something trillion dollars, and we're spending more on interest payments than we spend on like national defense or something. Like more money going to service the debt than to protect the country or any other budgets that we have. And I think it's only getting worse. So the government is essentially trapped. They can't really lower rates without risking inflation, and they can't raise them without making the debt even more expensive to carry. There's really not an easy way out. I'm going to talk about that in a couple minutes. The big thing, in my opinion, is AI. This is something that nobody had to deal with in 2008, right? Entire job categories are being disrupted in front of us right now. Even white-collar jobs that people thought were safe, like copywriters, analysts, customer service, some programming roles, they're gone, or they're at least changing fast. And companies are realizing they can do more with fewer people. We're in the middle of a crazy transformation while the economy is still shaky at the same time. That is the dangerous combo. In 2008, the trigger was just the housing stuff and the subprime mortgages, right? But that was just one thing. This time, we have multiple domino effects right now happening in real time. We've got the trade war and tariff stuff, which I swear is every other week. We're doing something different on that. We have inflation that reduces to come down. We have AI weakening, a huge weakening job market that's made worse by AI, a government that's drowning in a ton of debt. And back in 2008, the S&P lost about half its value from like top to absolute bottom. And that, again, was with one just simple catalyst, which was the housing market. We're looking at something bigger because there's just a lot more going wrong at one time, right? So it's crazy. Multiple pressure points are hitting all at this one time. And I think going into that, why most people will lose is it's kind of uncomfortable. It's even rude and weird to talk about, but they're just not prepared. They're going to lose. People are over leveraged on assets and they can't even afford. You look at Klarna payments, you look at car payments, you look at houses at peak pricing, unfortunately, which was told that, oh my God, it's going to be such good assets. They're holding investments on margin. They have car payments, credit card debt, student loans. Student loans isn't the big one here, but everything else, when things get tight, they're going to be forced to sell at a loss or at just genuinely the worst possible time. Second, nobody has cash reserves. The average American American can't even cover $1,000 emergency fund, I think I saw in some article. So when the market drops another, I don't know, 20, 30%, they lose a job, their hours get cut, they're going to panic sell every single thing. And that's scary. And then again, going into that, why do they do that? That's the third point. People follow mainstream and financial advice. They're told to just hold, don't look at your portfolio, it'll be fine. And that's decent advice if you have cash to survive on, but most people don't, right? I'm actually a big believer in that. I know I'm big on buy and hold and just set it and forget it. But dude, if your cash flow, if you don't have enough cash flow to even live in the first place, like you don't really have enough to invest. That's why I talk about increasing your income first and why it's so damn important, especially right now, right? So you're going to hold till you can't anymore. And then you're going to just sell at the bottom, which goes into emotional decision making. Fear is the most powerful thing in the markets here. That's what I've learned the last couple of days. When people see red day after day, they just crack. Every little poke that the market does, you're just poking the bear until one time everyone sells, right? That's the scary thing. They sell everything thinking they're cutting the losses, and then the market recovers and they've locked in the worst possible outcome. And then fifth and final, most people are just living flat out paycheck to paycheck. No cushion. 60% I think of Americans can't handle losing their income for even a month. That blows my mind. That is crazy. And this is exactly what happened in 08 again. People were over leveraged, unprepared. They got completely wiped out. The ones who had cash and were patient and kept their cool, they bought assets for pennies on the fucking dollar and became extremely wealthy. That's where things get crazy, right? So why is this a once in a lifetime opportunity? I know that's such a big, bold claim. I think it gets interesting here because when people see a disaster, I see opportunity. And a lot of other guys that are smart around me see opportunity as well. The biggest opportunities of our lifetimes is when things are dipping, is when things are crazy. More millionaires were created during and after the '08 crash than almost any other period. Buffett made billions. John Paulson made $4 billion personally. It wasn't the hedge fund guys either. I'm talking like regular people who just had cash, bought when everyone else was selling, built generational wealth. I know a lot of YouTubers that did this during the real estate and stock market boom in 2009, and not boom, but dip during 2009, and then they just held, and that was it. The S&P went from I think 1,500 points before the crash to 670 at the bottom. If you bought at 670, you're up over like 700-800%. Bitcoin obviously didn't really exist back then, but look what happened after 2020. It was around 5,000 at that time. It's now over 100,000, not at the time of recording, but it's gotten to that peak, right? So the pattern is just always the same. Crashes create millionaires, and not because of some weird rule or luck. It's just because assets are an extreme discount at that time. And most people are too scared or broke to buy, unfortunately, which is why I say get your cash flow right. The reality is generational wealth will get built during those times, not really the bull runs. The bull runs, like I said in my last video last week, I want to make this video because it's so detailed. It's so sexy to look when things are green. It's so hot. It's so cool to show your friends and whatnot. But I don't care during those times anymore. Honestly, the returns are average. During crashes, assets are dipped, assets are on sale, the competition kind of goes away. I'm seeing there's so few people buying right now because everyone else is freaking out or just holding. And I just think the sooner, again, not financial advice, but the sooner you're in, the less you can worry about it in the future. I can focus on generating cash for my business, always have that on the side as almost like a real life insurance policy. And then eventually, knock on wood, everything tends to go up after a long enough time horizon, which that's another thing of the haters I will always say, oh my God, 6 months from now, I'm going to be laughing at where you're going to be. It's like, brother, 6 months. I'm not even thinking about touching this money for a decade. Like, what are you talking about? This is why you're broke. This is why you're poor, is because your time frame is so short. You don't give yourself enough runway, right? It doesn't really matter. So again, prices I know are high during the bull runs. The returns are kind of so-so. But again, the bigger the crash, the bigger the opportunity. And if this does end up being worse in 2008, that just means the buying opportunity will be even better for those who do have money, who are prepared, who are patient, right? And again, a little bit of a plug here for Bitcoin. Like, the dollar is dying, and that's why I think Bitcoin and gold matter so much, is because I'm big on stocks, but people are losing confidence in the dollar for good reason. When you have 38 trillion in debt, you're just constantly printing more. You're adding billions a day with interest payments alone. That's just not sustainable, and the market knows it. Smart people know it. This is why gold just hit the all-time high. This is why Bitcoin is hopefully going to, progress towards those regions. And that's why I'm more bullish on Bitcoin even long term, is because gold has been a store of value for years and it works. I'm not against gold, but Bitcoin has something gold doesn't, and that's the scarcity. That's, again, the 21 million. The inflation rate on Bitcoin right now is about 1.1% annually. It keeps dropping. Compare that to the dollar. It's insane. right? So again, it's also being backed by more institutions. I did a whole video on that if you want to check that out. That's something that I'm just very, very bullish on long term. In 10 years, I genuinely believe Bitcoin will be significantly higher than it is today. And every major dip has been a buying opportunity historically. I'm treating this one the exact same freaking way, right? This is for my asymmetric upside potential. The S&P I'm still holding, my tech funds I'm still holding, but again, I both as hedges. I'm using both as hedges against a weakening dollar. That's it. So how do you prepare? How do you like really buckle in before things get worse? I want to give you the playbook. First, just build some cash reserves right now. Okay, that's the first thing. Not tomorrow. You need it right now. You need enough cash to survive 6 months minimum without touching your investments. This is the key thing. This is, like I said, your policy against being forced to sell at the bottom. Second, I'm not a big fan of this anymore, but just cut unnecessary expenses. Look at your subscriptions, look at the lifestyle stuff, anything that's really not essential right now. I'm like putting off buying nice stuff for myself because of this. I want every dollar you save now is a dollar you can invest when assets are at a deep discount. And then that goes into the third. You've got to secure income. If you've got a job, make yourself freaking indispensable, okay? Take on more responsibility than the next. Be the last person they never let go. If you're self-employed, diversify the income streams a little bit, maybe double down, get some marketing rolling so you can get more customers, whatever the hell it is. Fourth, this kind of goes without saying, reduce or eliminate your debt, right? High interest is a killer during recessions. You do not need high interest debt right now. When your income drops, you still have payments to make, you are trapped. This is why I loved when I paid off my car. I love paying off my credit card because I don't have any of that shit, right? Get rid of as much as you can now. And then fifth, don't overextend on investments. Yes, I'm buying, but again, guys, I say these investments because relative to my income and my cash reserves, it's pennies. Like it's not that much. And I'm going all in right now. I'm pacing myself because I think this could get worse. You want dry powder for when there's blood in the streets, right? That goes into how do you come up on top, right? There's something, if you want to actually build wealth during this period, DCA through the bottom. You're not going to time the exact bottom. Nobody does, but if you can consistently buy price drops, you'll get a great average price. That's what I'm doing with Bitcoin and index funds. Build cash flow businesses during the chaos, because that's just, normal. It's what you have to do. And then again, just goes back into the point of buy assets when everything is fearful. I love looking at that fear and greed index, buying when things are just so red, and accumulating as much cash as you possibly can to invest, right? So again, just don't panic sell. I cannot stress this enough. When there's downsides to lock in your losses permanently, that is dumb. Do not do that. Don't go into debt to buy the dip. Don't use leverage. Don't try to time the exact bottom because you won't. And then don't ignore this opportunity completely. That is the biggest thing that I can say is just don't overlook this. Don't take a blind eye to this, okay? In 5 to 10 years, people are going to look back at 2025, 2026, say, I wish I bought more. I wish I took it more seriously. And I wish I started the business. Whatever it is, do it now. Just please trust me on this. You're gonna love yourself for it. I'm going to love you for it, and you're going to crush it. So as always, you made it this far. I want to see you win. Thank you for your time today. We'll see you in the next one.